The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Let's get straight to this because there are a couple of patterns that are really important that I'm looking at here. One of the technical tools that I use is a particular pattern that I call the Chapman Wave Insight Track. What does that mean? It means that within declining tops or rising bottoms, or in an up channel or a down channel, within that context, I can take 2 price points, preferably 3, but at least 2 price points, and use them to draw a trend line. And then within about 3/16 of the chart itself, I draw another trend line. If it's on the way down, I'll make it green at the top, red at the bottom, and that whole area becomes the price point where whatever we're looking at could be deflected low. It could bounce and rebound away from that trend line. If it's on the way up and it comes back and holds support, that'll be key buying, pressure, and support level. And on the way up, if it hits that resistance, that's a repellent zone or a selling area. So we've just done that. We hit that line exactly. I drew it in a couple of days ago. We hit it exactly today. It was the highest 26,248 in the Dow. Now we've pulled back. But one of the reasons why I said to subscribers that for those who got long on Monday morning a week ago, if you're a swing trader, 3 to 5 sessions is kind of what swing trading is all about. We hit a price point in the 120-minute chart at a peak D, but I had 2 wave counts based on it at a D or in the Chapman wave methodology and a variation of the CW5 that I've been developing over the last couple of years, quite a few years actually. I had said that there was a chance that, yep, it could be a 5 at this peak D, but if it makes a new high, I might have to make a change, and I have made the change. This is now a 5, and this is suggesting that the high today of 26,248 needs a little bit of time. It doesn't say how much to the downside. It just says that this peak E, together with the Chapman Wave 5, could see some kind of retracement. You've got support right here at the 2620 level, 26,020 level, the 9-period exponential moving average, the green line. The black line is the 14-period moving average, and that is at 26,924. Way down here, the green line is actually the thick green line, is the 20-period exponential moving average, and that is at, right there, somewhere around 25,810. So within that context, I'm doing my webinar tomorrow night, and I'm going to be talking about a number of things. Let me see if I can actually find this here. Let me go to this right here. Okay, so it's called The Tide. Basil Chapman presents a webinar for the opening call subscribers. It's just for subscribers, and you can be a subscriber. You get 1 month with the money-back guarantee, and you can get not only my webinar tomorrow night, but there are quite a few that I've notated very carefully, and they're archived. They really are, I think, quite important. They were very important at the time when I did these webinars, and they remain, I think, important. So it's called The Tide, Tools to Help Identify Trends in Different Time Frames. And what's really important about this is, if I can just find here, so we're going to be discussing some of the techniques. For some of you, I always talk about the MACD and the slow stochastic. Let me call this the slow stochastic here because there are 2 stochastics that are traditional in software packages. One is the fast stochastic, the other is the slow. I just call it the slow because the one I always use. Key moving averages, I got a couple that I've spoken about many times before. I use them all the time on charts, but I'm going to now show you the importance because if I've had so much practice now in these 2-minute, 5-minute, 10-minute charts, just over and over, trying to trade, trying to figure out what I do wrong, what I do right, where I've got a peak D, but the technicals are still so strong, it could just be a brief peak D before it goes to another high, a whole bunch of things like that. So I'm going to be talking about how important these moving averages are. I'm going to be talking about time frames. You can look at, let me show you right here. Let's go to wherever we are. Let's go to this one right here. So let's go. Now we'll move to this. Let's go to the daily, and I'll include the 120-minute chart. Look, if you're looking at the 120-minute chart, it looks a little bit toppy. The MACD is just about to turn down, but it hasn't crossed negative. Stochastic was over in the 97% area. Now it's come down, but it's still strong at 82%. And now you're testing the 9-period moving average, the green line, and you've got the very strong black and green orange line, which is the 200-period moving average, all the way down to 25,800. So it says in the very short term, be a little careful because we are somewhat toppy, and these lines are becoming magnet lines because you've gone above them. Now you want to start to test them. Okay. In the daily chart, the MACD is very strong. The stochastic is at 86%. Hey, I love over 80%. I love over 90%. I adore 95% or more, right? That's like at the bottom when you're down to the 5% area, which the stochastic I'll talk about on my Wednesday night. Stochastic hit 5%. That was my downside target, was the single digits for that Monday buy, Monday week ago, because we hit a whole bunch of criteria that I was looking at. I'll talk about candles, I'll talk about gaps, but none of it in great detail. Why? Because these are the important things. Look, this is a single leg A up. If you know my work, a single leg A syndrome. Sometimes you can have that single leg A. We had it this morning. Let me just go there. Look, here's the E-mini. Look what happened this morning early on. It's trading now down 550. Well, this morning, it had a sudden spike to the upside at 930. Look at that. So, yes, it became a peak D, but in fact, it has all the characteristics of a failure mode, spikes up on news, and then pulls back. And then look what happens. It comes down, 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 down. And now we're at... so the high today was 29.11, and we're trading right now at 28.84. That is quite a pullback. All right. So that's how important these single legs are. But I suspect this is a single leg of consequence, and that the worst we would be looking at is some really bad news over the next few days. Takes the Dow down to 25,800, maybe 25,700, this whole area where the green line is. To me, just at this moment, that's the worst case scenario. It could get worse, but that's what I'm looking at. Best case scenario is we just use some time. The next couple of days, we just drag down a little bit because of the mixed market. Hey, look at this. UTX, which is being basically taken over by Raytheon, even though UTX is the bigger company, they're going to call it Raytheon Technologies or something silly. So UTX has been around forever, since in the 1920s. Well, UTX is down. It spikes up yesterday from the the 7th, the Friday close of 132. Yesterday, it's 135, and today's trading at 122. It gapped up and then plummeted yesterday to the 200-period moving average, and then it plummeted down again today. Look at the 120-minute chart, plop. And look at the weekly chart, still okay. Not great, but it was looking way better earlier on. So United Technologies is down, and you've got the acquired company, well, they're merging, down 10 at 177.09. This is Raytheon. So this is an important period because of this rotational aspect in the markets. Now you've got a little bit of merger talks. So let me go back to the Dow. I want to show you something very interesting. There's the 120-minute chart. See, we're right on the 9-period moving average, and we still haven't crossed negative in the MACD this time. I'll be back straight after this break. Basil Chapman. Dow is now down 25. S&P's down 3.5. Be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today. Steve Dahl and Tom O'Brien have just announced a special webinar on June 19th for all subscribers to the TAS Profile Scanner. Steve and Tom will break down the trade matrix, market breadth, heat grid, as well as the 3-step process you can use with the TAS Profile Scanner to identify market movers and how to capitalize on that move. For all the details and to get started with the TAS Profile Scanner today, visit the front page of TFNN.com. With a 30-day money-back guarantee, you have nothing to risk. Go sign up today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. So here's the monthly chart of the Dow, and you can see that basically the MACD and stochastic have been quite weak, but the price has held very well. And how does that happen? Those are the things I'll be talking about tomorrow in my webinar, and these things can, I believe, can really help you in your own looking at your charts and just deciding things, maybe conferring with someone, looking at it, maybe looking at my charts and comparing it. So I'm going to talk about time frames, overlapping time frames, triggering a trend reversal, sustaining the move. That's really what we're talking about here. Inverted relationships, like when we had the DOG, which is one-to-one short the Dow from the day before the most recent high, and we held all the way down with taking off various parts of it, and then switching to the very long position on a Monday a week ago. Those relationships really helped me. The diamonds and the dog, die dog. Sentiment, talk about sentiment. I was speaking to someone this morning in my workout center, and talking about the market. I didn't know the person knew that I did anything with the market. Anyway, we're talking about it. And I was saying, it's very interesting with all the news, with all the terrible, terrible stuff that's been written about the president. If you just look at the market, you look at the market, and the same with Obama. You could have thought anything you wanted, positive or negative, about President Obama. The market was going up. And one of the key rules I think that you have to consider is that there is no other trade. I mean, what else can you do? You're stuck in the market, because real estate is, at this point, for my purpose, I think it's kind of risky. If you're a specialist and it's your job, well, that's completely different. But as a novice speculator, I don't know. I think that you're being pushed into the market. So I'm going to be talking about sentiment briefly, risk and reward, how I like to do it for subscribers. And just briefly, I'll show you there's some other factors that we were going to. I'll do the usual thing. I'll talk about the major indices. I'll talk about positions that we want in certain sectors. We've already started since the last webinar. We've been already looking at areas that we want to be in, that we are in, or we're trying to get in, because I think those are the ones that are going to really succeed in 2018 going to 19 going to 2020. So, FANG stocks, different sectors of interest, etc. All right, so let's get back to our nitty-gritties, and we're going to go straight to, I want to get out of this, and we're going to go to Mark in Fort Collins. Hi, Mark. How are you?
Good, Basil. How are you?
Very well, thank you.
Good. Hey, I wanted to, this was on your buy list in your opening call a while back, and I didn't take the trade, but I've been keeping an eye on it, and I'm wondering what you think right now about carbon black. It came all the way back down to gap support from May 3rd, and it tested that for several days and held it, and then started moving up, and it's pulling back on lighter volumes. I'm wondering if you think it's ready to be bought again or not.
So as you know, this is always on my list because we had a small long position. We are that long position. I'm very disappointed. This is an IPO, Carbon Black Inc., cybersecurity. Everything looked like this should participate in the general group. Hack is the name of the group. That is the cyber security, prime cyber security ETF. That has pulled back as well. I'm looking at this, and I tell you that tomorrow night I'll be talking quite a bit about this. This is an area that's on my list, but I've looked at it closely enough to say that this is a stock that, as someone says in the den, CBLK, just give it time, it will work out. This is a stock that is in the right sector. At worst, it'll be dragged up when this sector gets kicking into gear again. Now, cyber was the one that I missed earlier. I even missed it back in the low of 2018 in December. It's just been a monster. CyberArk Software Limited, Israeli network security software company, went to a peak E in the weekly chart, and that has made me just a tad hesitant to say that perhaps this sector got away from itself a little bit. It got a little too high, and then it needs a little more time. So what I am going to say to you is, for cyber, let me go back, that was your question, cyber, but I just wanted to give you a feel for the sector and what I'm really looking at. But if you're looking at, let me just go back to this one here, CBLK, Carbon Black, trading at 15.01, down 51 cents today. I've got a feeling that this whole base that it's building between, let's call it, to be a little bit very strict about it, let's call it between 12, and that was an aberration going to 19, but let's call it, where I've got the rectangle, 17. So between 12 and 17, I think it's going to take a little more time to build a base. So there are two ways of playing this. Either this is in a portfolio of yours, almost like a biotech stock, that you just say, you know what, it's way off its high. The all-time high was 35, round number high, 2 months after it came out as an IPO. The low has been 11.80. I would say to you, treat it as, if you're able to do this in your portfolio, if you're able to dedicate a low-price cybersecurity stock, it looks to me, because of the move that it had initially, and because of the last rally from 12 to 19, it says to me that this is going to be a stock in play. In play, I mean that at some point it becomes a focus of buyers, even if it's short-term, and it has a really strong rally. The big thing for me now is that it's only once, and it hasn't fully tested the base from the gap up of $14 high back on the second. The last pullback was to $14.20. It doesn't have to fill the gap because it's already been into the gap. My suspicion is in the 14s. If you like the stock and you like the fact that it's in the right area, it seems to me the stock itself has a little bit of a problem. I'm talking about CBLK, not the sector, the stock itself, because I don't think it should have pulled back as sharply as it did in the last move from 19 down to the 14.20 area. So I think that says to me, have a little patience. Three ways you could play this. One is you could say right here at 15.02, it's still pulling back, but I'm prepared just to put my foot in the door at 15.02, but this is not my position. This is a position that's going to tell me on a daily basis how the market's acting and how Carbon Black is responding. Is it leading the way down? Is it suddenly starting to show strength? So that's just a feeler position. Hey, you know, they can even have 5 shares. It doesn't matter. You just want to have it on you. You can even put it on your radar without having it. You just put it there as in a little block on your computer, and you're following the price as much as you can during the day. But I'm going to say that would be a starter position. But in the 14 right here, 1460 area, that's where I would actually start to put a little bit more of a position on. And then I would wait. Then I want to buy strength. I don't want to buy a falling knife, because if it breaks 14, it's a real easy, quick step down to the 1330, 13 level. So just a starter position. Let's talk again. If you actually start the position and you're in it, tell me, and then we'll look at it again. But I'm not ready, personally, for my subscribers, I'm not ready to put a position on. I might if it breaks above the high of yesterday of 16.03, but at this particular stage, I think it needs a little more time, and then I think it'll be ready with the group. I want to hack HACK to lead the way up. I want CBLK to follow. I hope that helps you.
Yep,
Thank you for calling, Mark. Always appreciate it. That was Mark in Fort Collins. Dow is now down. Dow is down 27. S&P is down 3.5. We'll be right back. There's a lot to look at. I'll be back in a moment.
Basil Chapman has a special subscriber webinar coming up Wednesday, June 12th at 5 p.m. called The Tide. In this webinar, Basil will be demonstrating techniques that can help one identify whether the tide is coming in or going out. That is, whether a trend is bullish or bearish in a variety of time frames. And Basil will be speaking specifically to indices, currencies, commodities, interest rates, and key stocks. The technical tools that Basil will be discussing are available on almost all software packages that will be shown in historical context as well as live for current market setups. Identifying the key trend allows one to trade with the tide rather than against it. Subscribers also gain immediate access to 3 archived workshops so you can get started right away when you sign up. For all the details on the opening call and Basil's upcoming subscriber webinar, The Tide, this coming Wednesday, visit the front page of TFNN.com and sign up today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So looking at the 2-minute chart of the E-mini, look, we're testing the left side low. You just keep making these arch formations. Remember, that's what I talk about in my webinar. I like my Chapman wave methodology. It's these arch or cup formations. The more you test the left side low and take it out, the greater the chance that you're going to keep making lower lows until there's a point where the stochastic and MACD are very oversold. This is the condition right now, so there could be a little bit of a bounce, 28.84. Under 28.78, I think you start a whole new move to the downside. That could be later in the day. It doesn't have to be now. Right now, there could be a little bit of a bounce. 28.84 right now. We could get to 28.88. If it closes over 28.92 during my show up until 1 o'clock, that'll say, oh, a little bit of a bounce into the lunchtime period, and then we'll see what happens this afternoon. Let's go back to our story. I had a question about, so I wanted to look at gold. I'll do gold, and then I'm going to talk about GOLD, which is the former Barrick ABX. It used to be the Barrick Gold. Let me look here. So that's gone to a C in the weekly chart. This is very interesting because it's a pattern in the weekly that I have seen it, but very seldom, and it has a particular implication. So let's just go to gold itself. Gold right now trading at, oh, now it's up 1.8. I don't believe that gold is done for now. I think this is just a hiatus in this cup formation. One of the reasons why I say that, because I think that the dollar, especially with rates so low, the dollar is still consolidating. At the same time, it's given a sell mode signal in the daily chart, right? The PE at 98.37 on the 23rd of May. That's a big pullback for the dollar, 98.37 to 96.46, 2 points, almost 2 points. And a very quick move to the downside, or much greater than the 1 to 1 equals, or A to B equals C to D in that lightning bolt pattern that we look at. And it's a peak E, a very quick D to 3 weeks, 4 weeks later, we go to an E at 98.37. And this is saying to me, there's a little trouble here on the upside for the dollar. It's not. I don't think it's going to break down, but I do think it can consolidate it. It can go for another couple of weeks even, testing the 9. Could even go down to the 200-period moving average of 94.30. I hope it doesn't do that. Why? Because we're long. I still like it as a long position, but this monthly chart is saying, yep, this is very good. There's this M-shaped pattern in the dollar monthly chart, which says still holding at 90% is very good, but it's starting to test key support of the 9-period moving average right here at 90 point, just a little low, 96.60, and 96.10 is the 14-period moving average. So this is a consolidation for the dollar, as gold still shows some upward momentum, but it is pulling back a little bit. How the juxtaposition is going to work is important. Now we can go to GOLD, because GOLD is American Barrick, one of the very good companies in the gold mining sector. This is what's important. You see this single leg? Oh, whoa, mistake. This is not a single leg A. This is a B. This is a very good. I'm so pleased it made the B, because single leg A is that syndrome, failure syndrome, and leg B says, oh, this is good. Look, the stochastics at 90%. The MACD is strong. No, I like this very much. And in fact, the way it's looking, it wants to test the resistance level. Now I can draw this in. I'll show you how I do it. Look, change this to light green, because a break above this light green line is very positive, a close above it, I should say. And then I put a new parallel, and I make that red. And I choose a particular set of parameters in which it usually looks like a 3/16 line. It's funny to talk about a 3/16 line on a weekly chart. What does that got to do with it? It has to do just with the chart. And saying to me that I've got a target now based on the MACD just crossing over. It's a weekly, so I have to wait until Friday to confirm it. This is not even just a full second day, it's just a day and a half. But the stochastic turnaround with the unbalanced volume suggests that GOLD, trading at 1360, up 15 cents, has a really good chance of getting to this trend line right here, 1433 to 1456, but it needs 1455 to make leg D. So my target here is the mid-14s, 1450s. It might take a little while to get there, although the way the speed is moving with this gold chart, it might not. So gold stocks are acting a little, some of them are acting way better than the actual gold contract itself. So I hope that helps. Question in the den. And now I'm going to talk about support. 1315 is the 9-period exponential moving average daily, and 1294 to 1283 are the 14 and 200-period exponential moving average. I don't think in this move right now it's going to close under 1315 until it gets a leg C, which will be above 1370. Okay, I hope that helps you. And the monthly chart, once it goes above leg C to D, at that 1456 that I say it was, 1455 level or higher, you could start to see gold begin to weaken again. That's the way I'm looking at it. I don't think this is the big breakout unless the dollar itself breaks down. Okay, next question I had was, would I look at Goro? Goro is, oh, Gold Resources. Hey, what a nice move today. $2.94 yesterday, all the way up to $3.17 today, up 37 cents. Wow. That's peak A, peak B, peak C, peak D. This is one of the quickest you can do in the Chapman wave methodology. Look at this. It's actually 1 bar greater. Now, I would not have said yesterday at all that there'd be such a big move unless there was a story to be told. So usually a very quick A to B to C to D, especially if it's not that big, but actually price-wise it is. It went from the 270s all the way to 327. Yeah, that is a big percentage. Yes, this is a very good start to a move up. So what I am going to say to the questioner is, are you already in it? Are you in Goro? Because if you are in Goro, congratulations, you held it through thick and thin, and now it's looking really good. It means that the $3.05 to $2.94 should be very strong support on any pullback. And this is the first weekly chart that says this could, in fact, be a leg A to the upside. You're in it. Congratulations. Took a little while, but now it's doing exactly what you wanted. Even though it's a quick A to B to C to D, and there should be a pullback. It's only a pullback that I never say at a D, you have to get a major pullback. It says, just be careful in this particular situation. Could be a bit of a pullback. The 120-minute chart would suggest a pullback to the $3.10 to $3.07, unless it's just a news story, then it's going to give back much more. But if this is just part of the looking at gold stocks and this became favorable, let me look at my ASA. ASA is doing nicely. It's up 4 cents. Nothing like gold, like the GOLD Barrick chart. This is going to take a little bit more digestion. And that's really what I think is happening right now. So let me just do this. Another question I had, would I look at the agricultural stocks? Yes. You've got wheat up 4 at 511. I drew the oval pattern because I think it's forming a Chapman wave stork leg formation. That says it should go to a leg D above 529. Doesn't give you a time, but the usual thing is it's an elongated move to the side in a definitive oval pattern, not a rectangle, but an oval. And that says by what would be Tuesday? By Tuesday of next week, we should see at least one attempt to get to the 529. Let's just soy before we go to the break. Soy is trading down $1, nothing to see here. But corn is doing corn's doing very well, up 10.25 at 426. That's going to break that downtrend line. I'll talk about it as soon as I get back. Basil Chapman, Tiger Ignitions Hour. Dow is only down 13, S&P down 2.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the Gold Report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your Gold Report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
All right, let me just finish this. That's an E and an F. This is a brand new move. This is a G/A. Wow. Generac, I was asked about. GNRC up at 63.30, up 55 cents. Question was, no, a question more statement and then a question. I had brought up GNRC about a week ago. It's moved $10 plus. Did not get in. Sad face. Where can I get in? It's a 5-year cup formation. You know, I do remember this. I don't know why I didn't notate it. And I think it was because it was down here and I was saying, let it just rest. I didn't even do the notation. Wow, it rested maybe for an hour or two and then it just took off and it went from the 54s right now to the high today of 65.73. It's trading at 63.25. So where would you get in? I'd put it either just above or just below the high that was made at peak F at 60.69 to 58.45. Now, the question is, with a move like this and the MACD very strong, the stochastic just now going to 94%, to really break down and go under 80% for a failure pattern, you know, that pattern I talk about where the stochastic didn't hold over 80%, you would have to see this way under 62. I don't think that's going to be. So I'm going to say this. I think there's another leg to the upside here. I don't think this is a G. I'm not even sure it's an A. I think I have to go back and treat this here, peak D, this is like an ABC. This is almost like, it looks more like a D/A than anything else. And one of the reasons I say that is that the speed with which it ran up, the power with which it ran up is going to be tested by the next 3 days. If it pulls back, only goes to the 62.20 to 61.70 into the top of this green candle here, then I'm going to say to you, it might hold steady for a couple of days and then make another move to the upside. So to say that you'd be buying it at the bottom, because that could be buying it close to the top and then it goes to the 66 level, then the next failure pattern, although this is the period I think you start to see people wanting to buy generators in the summer when there are all these different storms, but it's usually the winter time where in the Northeast when you have power failures that you want the generator. I believe it's generators, huh? Might find out it's generic biotech or something. Anyway, no, I think it's generators. And what I am looking at here is that as part of a portfolio, here is 63.36. If you can get one more pullback, I would start the position on the next pullback, and hopefully it's between 62.50 and 62.20, somewhere in the 62s, low 62s if you can. Just start a position. Why? Because I think there's going to be another move to the upside and then a pullback. That might be the pullback that goes under your entry point. Why do I say that? Because the stochastic's still very weak at 69% in the weekly chart. MACD is very good. I've got this divergence, and it's suggesting that longer term, I think this is going to the 67, 73 area. What do you do here? If you're prepared to put up a 2.5 point, if you put up a 4 to 5% risk premium right now, then I would say at 63.38, I'd even take a little nibble here. I'd add a little bit more in the low 62s. Wouldn't do anything else other than that. And then I'd wait to see, does it have one more pop? And how does that pop up? If we can get to the 66 area and then hold, we might find that this is a really important breakout. And if you look at it on a weekly basis, look at this. Look at this cup formation, the breakout. And the last one was, look, so that's A, B, C, D, perfect. D pulls back, A, B, C, D, E, and it goes to an F. And it pulls back, and now it's in a D. So this cup formation, this is a Chapman wave cup and handle formation, breakout, except for one problem. It's going to a D already. And that's the objective. In a breakout pattern, you want to go to at least a D, at least a D. Very often you go to an E, then you come back and you retest the top of the left side lip. And that's the one at about 60. So let me put this into English. I would nibble either right now, but I prefer, if you have the patience, maybe tomorrow you'll get a better entry point in the 62s. That's where I would nibble. And give it a day or two to see how it holds. If it keeps pulling back, the nibble's okay. You're going to have a wide stop. But I think you're correct in pointing this out to me, repointing it out to me. I think Generac Holdings trading at 63.28, up 53 cents, having gapped up from yesterday's close. I like it a lot, and I know that you do have some tolerance for a pullback. So in your particular instance, a 5%, even a 6% pullback's fine. I would be building a little portfolio. This is a good-looking stock. Whew, got that out the way. Next question I had is, would I look at the XRT? You remember the XRT is not my favorite. It's the XRT is the S&P retail. I like the RTHY because that one has Amazon, and that really is giving it a boost. It's a way better looking Van Eck retail ETF at 107.20, up 38. But I know that the questioner wanted XRT. What was the question? Just to give me a down, up 1 point. Home Depot, Walmart, WBA, Apple, Nikkei, GPS. Whoa, Levi, Kiss. You put them all in, huh? All right, GT, let me just have a look at this. Here we go. So this is the one, this is the real one. This is the one that doesn't have S&P. It has all the rest of the bricks and the mortars. It's got a real problem. It's making the arch formation. Yes, let's look at Home Depot. This is part of my cash index. Cintas, Amazon, SPY, and Home Depot. Those four stocks make up my that particular index. So Home Depot is really struggling. It's doing... it's doing okay considering what's going on. It's in the middle of the range from 215, the all-time high, to the low of 186. The low of 158, and now it's at 196, down 1.68. I wouldn't be buying Home Depot right at this moment. I just needed to have more time. I think it's had a spectacular run. It's got the hat-trick top. Tomorrow night in my webinar, The Tide, I'm going to be talking about the tide in relation to these big stocks. Now, I am going to do this on Home Depot because it catches my eye as fitting appropriately. This has a huge oval pattern. And I don't know if this is a big topping area or whether it's going to break out above 215.43. That's my guess. But at this particular moment, I think that it's got a bit of a problem. So let's see where that goes to. XLK was a quick question here, quick question on the tech sector of the S&P. I think it's overdone on the upside. I think the XLK, keep your eye on it because it's gone peak A, peak B, C, just made a peak D in the Chapman wave at 77.83. It's trading at 76.63 right now. I think it could pull back to 76.20 to 75.70. That's kind of the area that I'd be looking at it to say, hey, you break below that, that's a real problem. But if you can hold over the next 3 days of consolidation after such a good move, that looks out and is very positive. But in the meantime, stochastic is good at 83%. MACD is good. This should hold. So yes. Next question I had was Walmart. Yeah, let's have a look at Walmart. Oh, Costco. Does Costco come out with earnings? AB, this is an overlapping C, and Walmart trading up 54 cents at 108. Wow, we've only got one break to go. Oh, wow. Legs D, weekly chart leg D. Oh boy, this is excellent. Walmart trading up 54 cents. It's fighting the downturn right now. Costco, what is that? Costco's trading at? Costco's down 19 cents. All right, I'll talk about these when we get back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Folks, just so Costco's broken out. Yes, this is an expanding wedge pattern. I've seen these patterns so often. Maybe one out of every 100 or 300 actually come back and go all the way back down to the bottom trend line. This so far is very good. Stochastic at 93%, and MACD's expanding in the daily. Weekly, they came out with earnings. I don't know what it was, but so far it's acting quite well, down 39 cents. But it is a leg E in the weekly, and the technicals are still strong, so we'll see. I think it could pull back maybe to 247. So far, this looks good. The monthly chart looks really excellent, a little bit better pattern even than Walmart. Walmart's a very good pattern. I'm so pleased that these big, large bricks and mortar companies are actually doing okay here. Okay, before I run out of time, tomorrow night, I'm doing my webinar. I'm going to be doing a webinar. It's called The Tide. I'm talking about the tide. How did we pick the top in the Dow the day before the recovery high on the 23rd of April and run it all the way down, shorted it, got it all the way down, took profits on the way down? How did we reverse it when we went on Monday long And what are we looking at for Tide? What are the ingredients that are very important for the long term, short term, etc.? The techniques that we're going to use, moving averages, different time frames, stuff I talk about all the time, but I'm putting it together as an educational package. It's really a lesson I'm going to give. It's not going to just be a webinar sort of blabbing about things. This is, as I always try to do, what are we going to do for the next 3 months? What have we done already? What's working? What do we want to stay with? That's really important. What do we want to add to? I'm going to be showing different chart patterns. I'm going to talk about the tide. I'm going to talk about the tsunamis or bubbles. This is a fascinating period, a little politics, just in terms of relationship. I never talk about voting. I talk about what the relationship is of the market to our president, who has claimed that it's his. The stock market is his. So that's very important. So it's going to be a very important and elucidating something that you want to do with the archives and go over. Look at this. How did I get the short today? Not the short. How did I say to traders, if you're a trader and doing a swing trade, today's the day to take your very good 11% gain in just 6 sessions in the Dow. Take something off, take a little bit off, and they got 11%, got almost the high of the day. Now it's pulling back. So those are the techniques we're going to be talking about, and I wanted a very functional thing, so you come out of it saying, this is what I want to do. I'll be back with Tom later this afternoon.